Please see description for details of presentations and availability of book for sale. Based on the book Different Concepts 1. The New Global Brand Name, Corporate Citizen. 2. Blueprint for Trillion-Dollar Indian Agri-Economy are presented here. Useful for corporate and corporate citizens alike. Have a look. The New Global Brand Name, The Corporate Citizen. Part 6. SAP Case Study.
It was in March 2011. I did an analysis of SAP Sustainable Report on UNGC. UNGC, there are 4 issue areas and 10 principles. I have given the reference in my book and the full details of it you can download by referring to the book. Suffice to say at this point of time, as you may note, as I have given here, the final summary report says the net rating is 2. It's made up of 1, 3, 5 and that sort of thing. In this they are creating, it's a creative process. What the book also says as a intellectual value capital. You create something for the purpose of taking an action. Any strategy plan is a creative process. It starts with something and ends with a plan. That is that as far as SAP is concerned. But what you will note, even though they got ultimately 2, they got in one particular item, that is principle number 10, 5. Getting 5 is very tough, as you will see in the book, because 0 to 5, because you go through the several processes of identifying whether it matches with the, as I said, the benchmarking, based on which metrics are being given. In anti-corruption, in addition to UNGC principle number 10, normally I use UNCAC, United Nations Conventions Against Corruption. UNCAC, as you will see from my book, it is something extraordinary. It is the benchmark for any one of the various policy statements that you prepare. I repeat that over here again, that UNCAC is the best template that you should use for the purpose of creating a policy. In that process, I've created, assessed SAP 2010 Sustainability Report. Remarkable, isn't it? They did achieve at least one of the top. But in Feb 2016, this is extraordinary. I saw that SAP arrived at a compromise with SEC on one of the bribery scandal that possibly roughened up SAP by settling about $3.6 million. Yep. This is, you make an attempt, you create a wonderful process, and in the action process, you fail. So you have 2 in the intellectual value capital for which you have created. In the action process, you fail. You get 0. So 2 plus 0 divided by 2. There are 2 processes. You get 1. So intangible value capital is equal to intellectual value capital plus action value capital. You got 1. The second one, which I said, that we have matter is energy waiting to happen. The waiting to happen is the one of an activity. Agree? That waiting to happen for SAP to optimize themselves in this particular case of UNGC principle 1 to 10, they ultimately get 1. The one they get, and maximum that you can get is 5. So they have 4 as inactivity. 1 is activity, 4 is inactivity. There is no energy being put through. This means we have a major problem. This had been the case which had been talked through during the financial crisis 2008. Siemens had a problem, and you have Volkswagen problem. These problems invariably occur in the action value capital is missing, when action value capital is missing. In action value capital, you may or may not have intellectual value capital already being created. In this case, they have created. In the case of Siemens, they have created. If you go through the Siemens past records and what I have quoted in my book, you'll be surprised. They have made a wonderful intellectual value capital on various factors, but failed in action value capital. This is where the inactivity is paramount importance. Then, what is the next step? As far as SAP is concerned, please pick up my book, come out with a clean report. Go for 100 years from today, where none of us are going to be survive, and then we can talk of the Gen Next. We are all very particular about Gen Next, what we are going to do. Put it that, and what you can do right now to overcome what are the failures that you have already got out of this UNGC. I'm giving one example. The total this thing is one too many. With any number of employees that you've got to implement that. It is not a big, it's not a multi-billion-dollar re-engineering process. It's a simple process. If all of you sit down, if make yourself multiples of 5 people, if you got 100,000 or 500,000 people, it does not matter. Take as many as you want in their own area of operations. Bring the clean reports. Unless you bring the clean report, a company like SAP, who is putting on the top, who is one of the topmost companies of the world, if you do not give a lead, what will they do? And so many millions of micro and small industries. You are there not for the purpose of profits. You are there for the purpose of ethical motive to be that will have an impact on about millions of other small companies. Give a lead. Same case with Siemens. Same case with Volkswagen. You have erred. If you have erred, does not matter. Come back with a clean report and bring the data to the table. Society is table. What you are doing is trying not to, okay, it has happened, just suppress it under the table, under the carpet. It won't do any good for you. In the case of Bayer, they are not in the same category as Volkswagen or Siemens or SAP. They are in different category. They earned. It's like in tennis parlance they say, unintended era, unforced era. They made a mistake on the 6 strategy plan stages. Stage number 5. Please go through the stage number 5. Do not come out of the to stage number 6, which is a strategy plan. If you go through the SAP 6 UNGC sustainability report and the points that they got, other than principle number 10, the balance 9 is very bad. So this is the one that has brought into limelight regarding the 5th stage. This is where Bayer had Iyer. And Bayer, I have a lot of respect. If you please see the dedication page for my book, I have indicated to the reverse mentoring, reverse mentors. Who are the reverse mentors? My grandkids, I have put. The reverse mentoring, I read it from Harish of Bayer, and they are doing a good job. They've earned to the magnitude of over $60 billion. And glyphosate, whether they thought about it beforehand or not, I do not know. But this is what you have to bring about. If I weren't at that point of time before making a M&A with Monsanto, bring it up and put it on the society's table. We are looking at companies who are going to grow in a phenomenal manner, as we said about the goal congruence. And this is what your company workforce have to join together and come back with something very positive. Hearing is all right, it can happen, but corrective part of it is missing, absolutely missing. There are two factors of that. Either you do not know how to do the metaphysical concept being converted into physical concept. That is one. Number two, indifference. There is ethical indifference is the one which is really somehow you feel okay, bad about it. This Volkswagen, particularly 11 million vehicles fitted with the software which is not cheat software, they say, on emission control. Yeah, you can come back. You've got to come back. The only way that you can come back is bring what you want to do now, after having yet, bring it to the society's table. You will do well. That is my advice. Everybody who is working for the company, please, whichever the company that you are in, make the cream report, and that is your future. Otherwise, thank you.
Please see description for details of presentations and availability of book for sale. Based on the book Different Concepts 1. The New Global Brand Name. Corporate Citizen. 2. Blueprint for Trillion-Dollar Indian Agri-Economy are presented here. Useful for corporate and corporate citizens alike. Have a look.